Okay, good evening, everyone. Hope everyone's okay. Hope everyone's well. Cut that one a little fine, I admit. So we're Tuesday, 8 o'clock, 31st, end of March, end of actually Q1 of 2026. And to be honest with you, that seems to have absolutely flown by. I suppose for some people it may not have felt that way, but it has for me. And, you know, we're 6 months into this bear market now. And I was having a conversation with someone, it was over the weekend in Discord, just about sort of where can we go? How far potentially can we go? And I thought, right, well, actually, it's kind of an interesting topic. So let's actually have a look at that tonight. Let's have a look at how far we potentially could go down. I also then want to talk about a mentality point of view, because I think that is very key to hammer into at the moment. Obviously, we'll look at Bitcoin's price. We'll have a look at some of the fundamentals around where Bitcoin's price is sitting at the moment, and we'll take a look at some altcoins, namely Tau, but we will look at other ones as well. As always, if there's any questions, feel free to drop them in the chat. And also, hey, there's a little poll this time. Where do you think it's going to go? Somewhere in around 50,000, in around 40,000, 60,000. We've already had the bottom. I didn't put a fourth option. I probably should have, to suggest maybe even lower. But let's have a look at what you guys think as we go through. Let's just jump onto the charts, and I don't know why, but my camera is missing. Every time my camera goes missing, I don't really ever remember why. There it is. Not that you need to see it. But here it is, Bitcoin 3-day time frame. And, you know, the natural thing to draw your attention at the moment, I suppose, is that trend line that we draw on the 3-day time frame. We have lost it. What we're kind of experiencing at the moment, a little bit of a Kobo from that. We have actually gone up, even on the wick, ran straight into that, had a little bit of a rejection. 5 hours to go till the candle closes. Remember, the clocks went forward in the UK last Sunday, or Sunday just gone. So that now means that the daily candle doesn't close for us till 1 a.m. So there is 5 hours left to go on the candle at the moment. But right now, we are kind of still treading water in no man's land, smack bang in the middle of the two yellow lines within this range. And whilst, yes, you can technically say we are below that trend line, and obviously we are alert, waiting for something to happen, the reality of it is nothing has changed for 8 weeks. We need a swift movement, well, a strong movement, a decision to be made one way or the other. We either lose 62,000 or we stay above 72,000. And because it hasn't really happened at the moment, it does feel like I just repeat myself week on week. But that's where we kind of see it. I suppose my eyes are gravitating a little bit more to price action, just solely because we are below this trend line. But, you know, you could quite easily draw a different trend line on the daily, which I'll do later on, which will kind of tie in actually a bit like this. I know it doesn't with the wicks at the moment, but there is a view from that. So it's very, you know, independently drawn, and how you look at it can totally change that view. I'm going to leave it like that for now. It works well, and it gives us something to look at. But really, the situation hasn't necessarily changed. What I will say is that Bitcoin has actually managed to hold its price over the last month, over this period of uncertainty with what's been going on in the Middle East, rising oil prices, etc., rather well compared to other risk-on assets. So something to at least acknowledge there. I have finally managed to change and save this final one. So I thought I'd just throw on the NASDAQ. Could have been the S&P, but anyway, we'll look at the NASDAQ. And we can kind of see that move down is still continuing. It does come with its own volatility in terms of, you know, generally we see a sort of 60 to 70% recovery. But I think we can acknowledge that pretty much over the past 2 months, we have been trending down. And whilst the downward movements have been brought back up partially, we're continuing it down. The reason I am interested in this is we lost the $24,000 level, the level I was looking at, which was around here. We've lost that level. It's actually ever so slightly higher. I thought that was 24. It is here. Now that we've lost that level, we really got to ask ourselves, are we going to see this falling? And I haven't really pruned my SIPs or any of my investments at the moment. I'm kind of like, I don't want to be that guy that knee-jerk reactions, because I'm conscious at the moment that a resolution of some sort to what's going on with the US and Iran could lead to a knee-jerk reaction in terms of the price going up. So I'm sort of like just sitting on my hands at the moment, acutely aware that we've lost the level that I was looking at. But we are still in a bit of an events-driven market at the moment. And so it's hard to ignore that at the same time. Anyway, it's where I currently find myself with this. We are monitoring it, as I said. We look at total market too, so everything but Bitcoin. Similar picture to Bitcoin, no surprise. Still within that range, still below $1 trillion, mind. I'm just waiting for that decision. This is just the indication that the market, as in the crypto market, is aligned. Altcoins and Bitcoin, they're moving currently as one, with the odd outlier. We talked about that last week, but generally moving as one. And then we've got BitCenter, which has had that pullback we're talking about. We said sort of down to that 300 level will be sort of the first indication back into that Gandalf line, the 800 EMA. We have had that move over the last couple of days. We're starting to see a bit of a recovery from that. But to be honest with you, I don't think our current chart pattern is really telling us too much. Nothing to be alerted about, nothing to be concerned about, nothing to really get excited about either. We'll check it out on the lower time frames later on. But right now, we're kind of potentially making that way down to that $280 level, sort of indicated with what the yellow line is ultimately doing there. All the way down to there, still a very bullish kind of scenario, just a natural pullback from a move up, and maybe just sort of a stepping stone for that next leg up. That would be, obviously, out of kilter with what the rest of the market is doing, but BitTenter has done that over the last 2 or 3 weeks, so not out of the realms of possibility. But we'll be looking at that 280 level as a real understanding of, we lose that, and I have to say, if we lose that, I think we go all the way back down to at least 200, just to sort of come back to where we broke out here, I suppose. Oops, that was a kind of what I wanted to draw in, because I was also trying to tie in that line there. So that's what I'd be looking at in terms of where that's going. In terms of Bitcoin, 12-hour time frame, we're just going to try and rattle straight through it as quick as we can really today. The yellow box is indicating some of the liquidity zones. Obviously, we had that move down over the weekend, which did take us to bottom of sort of 65,000. We ate into that liquidity, but that's not really where my focus right now is. The focus at the moment is on, yes, the ranging pattern that we've already talked about, but we can actually see 12-hour time frame, 20 and 50 EMA prices now below that. We've also now finding a bit of a sticking point with Bitcoin's price currently at the 0.782 fib level. Sorry, 786. I did feel that sounded wrong when I said it. Fib level. And so, you know, we're finding a little bit of a stuttering block. Now, that doesn't mean we can't get through it. I accept that, obviously. But we need momentum. We need kind of a shift to break through that and the EMAs. And this kind of shows me that, you know, nothing really changed in terms of what I need to see from the upside to get excited. We got to get back into this liquidity here, back up to this $72,000 to $74,000 level. Get this moving back up, and then and only then can we actually have a serious conversation about whether or not we can make a new high in and around about, it's going to be 76.5, 77,000. We do that, you know, again, nothing's kind of changing, would be in that ranging pattern, but at least we're making that high. And the argument that I was alluding to, if I can actually, sorry, it's the problem with using all those screens. I've lost the mouse. There it is. Let's just get rid of some of this. I was trying to do it with Control and Z, but that didn't quite work. So let's just get rid of this at the moment. Let's just get rid of a few of these, because as I said, just to sort of re-emphasize where things are. Sorry, why I didn't just get rid of them all, I don't know. But when I was talking about that sort of trend line, and you know, I can draw that trend line there. So that's kind of taken in sort of the wicks, which I appreciate. I normally do body to body, but the point being that now that we're on a lower time frame, the previous one we were on the 3-day time frame, we're now on the 12-hour time frame. We can kind of see this bottom trend line. We have had some fairly decent interaction within this throughout the last sort of 8 to 9 weeks. But what we've actually seen over the last week is not only did we lose it, but we're staying above it. We keep on hitting in it, and it's running into resistance there. And so I sort of tend to look at that and go, well, actually, maybe this is a genuine just Kobo before we see that move back down. And as I said, that move back down really should be down to this. It should be down to that level of liquidity down there, or at least if failing that, where that clothesline is there, sort of around about 600. So we can kind of see where this move may go. Now, we're going to talk about how low things can go a little bit later on, but obviously falling down through 62,000 for me is going to be 2 seconds. Sorry, I thought I'd lost my stream then. Just someone let me know if it just drops out, because something seems to have gone on. It's never an easy stream, is it? It was a microphone last week. And anyway, obviously everybody's just jumping on the internet. Hopefully it's all good. If not, I'll just pick it up in the edit. I've lost my train of thought. Yeah, but obviously a loss of that 62,000, we've really got to start to question, not only can 60k holders, but actually is this now the start of the next leg down? So that's what I'd be looking for from that point of view. Obviously we'll go into this a little bit more detail later on. Just thought I'd bring this up because we're at the end of Q1. We're at the end of March today as well. And it's technically a green month. Actually, when I looked at this early on today, it was a red month, and that's what drew my attention. So we're ever so slightly above 0.00%. Let me just refresh that, see where we actually come out right now. So we're still at 0.84. Okay, fair enough. The reason I was looking at it is prior to it just ever so slightly turning green, 5 hours to go, so who knows where it's going to go. I was thinking we were going to be 6 red months in a row, which would be the longest Bitcoin has ever posted monthly red candles. It seems like we have perhaps bucked that trend, although we will wait and see. But, just from I suppose an exhaustion point of view, are we going to be looking at some sort of stability to try and at least give some semblance of a recovery? And as I said, we've still potentially got another, 6 months of this. We could still fill in this. I don't expect all of those to be red, of course, but that in theory is how long we've got till the end of the bear market. We're only halfway through it. So there's still plenty of time for things to transpire and, effectively continue on the downside. In terms of the fear and greed side of things, we're still rooted firmly in extreme fear. That doesn't necessarily seem to have changed regardless of what the price is doing. Factors outside of crypto are obviously going to play a part on this, particularly with it being a risk on asset. But yeah, I think we will just continue this. There's no reason why that is going to change. And the only reason I can see that changing is price sticking the landing above 76,000. And until it does that, we're not really too confident in it. We look at the ETF side of things, BlackRock obviously being the far left column of this. Still a fairly continuous outflow of Bitcoin over the last 2 weeks. Okay, yesterday they managed to muster up 8 million from the side of the sofa and buy some there. I think we might actually see a green day or a black day today as well, just given sort of how price has managed to hold up over the course of this trading window. So something certainly to have a look at. Now, one of the things that was quite interesting, which I don't think has been necessarily covered enough, was good old Powell had a bit of a chinwag at Harvard University yesterday. Obviously, he was asked about interest rates. He was asked about inflation. And whilst I'm not necessarily going to go through that, that's not what I'm interested in. Well, I am interested in, but it's not what I'm interested in talking about this for. The interesting thing that he came out and said was they actually feel like they're in a good position short term in handling inflation, but also in currently where the interest rates currently stand and how being at this 3.5 to 3.75 position just allows them sort of the ability to just feel out what's going on in the Middle East. And that was interesting because I went and then looked at the Fed Watch in terms of, we bring this up every time there's an FOMC, and we talked about last week how it's flipped now. It's flipped to either remaining at its current value or actually increasing. There's no longer talks of interest rates cuts in the near future. But what was interesting is immediately after he spoke, I started looking through the other months. So the next one, end of April, looks like it's the rate going to remain the same, 98%. We go to the one after that, June, still 90% chance we're going to keep the rate the same. July, 86% chance we are going to keep the rate the same. September, 86% chance we're going to keep the rate the same. October, 84% chance we're going to keep the rate the same. And into December, 72% chance we're going to keep the rate the same. Now, obviously, there's a pretty long-term forecast, but the narrative has shifted significantly. The narrative is now saying the markets are going to price in that there are no interest rates or no expected interest rate cuts or raises for the rest of this year. So that sort of narrative, the back end of last year, of we're going to get some significant rate cuts, money printers turning on, and we're off to Valhalla. Looks like the Fed's postponing that at the moment. And the reality of it is that until we get some sort of resolution out of the Middle East, I think that's going to stay. Now, why does the US think that they are particularly confident that they can handle inflation? Yes, okay, the price of petrol, gas, I suppose they call it, at the petrol station, gas stations in the US has actually creeped up to over $4. Which is the highest it's been since 2022. But ultimately, they are not running out of oil like Europe is, like Australia is, like the UK is. And I didn't bring it. Let's see if I can find it. It was interesting because good old Trumpy early on today. Where was it? Here we go. I need to put it on the other screen. Sorry, 2 seconds. Is that on the screen? I hope so. Good old Trump and his Truth Socials. For all the countries that can't get jet fuel because of the Straits of Hormuz, like the United Kingdom, which refused to get involved in the decapitation of Iran. I mean, the way this guy speaks is unbelievable. 2 suggestions: buy from the US, they have plenty, or build up some delayed courage, you go to the Straits and just take it. You'll have to start learning to fight for yourself. The US won't be there for you anymore, just like you weren't there for us. Iran has been essentially decimated. The hard part is done. Go and get your own oil. And I think that's the point. I mean, as difficult a position as this may be, I think Trump might have thought there would be a simpler resolution to this, although kind of narrow-sighted that he didn't think that Iran with a navy could block the Strait of Hormuz. They don't necessarily need to rely on oil as much as the rest of us. So it's starting to hurt us a lot more. It's going to impact inflation for us a lot more than potentially it is going to for the United States, certainly in the medium term. And I suppose that's why the Fed are pretty much like, we're just going to sit on our hands and just wait to see how the data unfolds. I mean, Powell's done that for the last 3 years, so there's no necessary surprise. But I think they are going to be able to ride this a lot better than we are. Just because, let's face it, at the beginning of the year, what did they go and do? Just went and invaded the countries, took the leader, pretty much paid him off, and then took all their oil. So fair play for that move. But yeah, that's where we kind of find things. Let me just shut that down so I can actually see what's going on. But yeah, so I would just be cautious at the moment. Now, obviously, a lot of this can change. You know, a quick resolution, markets are going to sort of react to that, and maybe then the Fed starts to see a better turning of these. But as things stand at the moment, and the general consensus seems to be that this ain't going to be resolved soon, despite what headlines may come out. The deployment of 7,000 troops into the area suggests that actually we are waiting for some sort of ground invasion, and they just take time. They're going to be messy. It's not going to be as a quick resolution as these politicians would like it to be. So yeah, I could see this certainly drawing out for the rest of the year. So then we get ourselves to Bitcoin weekly time frame. I'm going to have a quick sip of tea before it goes cold. We kind of just see, again, nothing really necessarily changing, but again, nothing's particularly looking too attractive either. We've had sharp moves up. I mean, we had the move down, and then we sort of had this sort of high test at the beginning of the month, and then obviously what's happened in Iran since then. But this move, short-lived as it was, being rejected now, we kind of have to ignore this current green candle for now. It's 5 days for it to go. And so we've just recovered all of that green candle back down on support, and that battleground needs to be won or lost. And I think this is what is waking a lot of people up, that we're back here inside of 4 weeks. We had a little bit of a move up, that sort of knee-jerk reaction we talked about that we typically get in March. And as we move into April with historic weakness, we're probably going to lose this level and move on down. And I think that is it. But before we get on to those, you know, just to reiterate, there's nothing really to get excited about. I cannot muster the enthusiasm until we at least get above 79,000 and the 20 EMA. And, even that is historically, that historically happens in bear markets. It's actually the 50 EMA, the blue line at 87,000 that we really need to get excited about. So until those two things happen, I'm just going to try and do what I would say do best. That's not true, but just what I do in terms of maybe take some opportunities in trading this. I actually haven't placed a trade in nearly a week because I've just been dealing with the bot. Not in a negative way, but just that's where my focus has been. And so I've just sort of really been sat on my hands, kind of expecting something to happen and that continuation of the bear market to resume in the near future. Not saying it's going to happen tomorrow, but in the near future. So then I think we get on to, well, how low can we go? And I think we need to caveat this with nobody knows. Let's just start that conversation straight off the bat. Nobody knows how low we can actually go. And yeah, the odd person may get lucky. And I'm sure we'll know about it when they do guess the bottom. But the reality of it is, we don't know. We don't ever know how far it can go. We can go off historic data to try and give us an area, to try and help build that edge. But once we have that information, what we then do with it has to be, I think it has to be ingrained in your head. And I'll get on to that point before we move on to looking at daily time frames and below for altcoins. So how do we usually pick how far a bear market can go? One of the most common ones has to be, fall from the top. So last bear market, top to bottom, was around about 77%. The one before that was 84. The one before that was 87. I'm not going to draw them out for you. You just have to trust me that is the case. So we could say, right, well, it does reduce over time. So let's just be generous and say, actually, it's a 70% reduction from top to bottom. That should give us a good ballpark figure as to where this bottom may land. So I'm going to just try and eyeball this. The top. So at the moment, we've seen a 52% drop, really, 52% drop. So actually 70% is going to be a hell of a way down. We go all the way through the 40s, certainly at 65. We get ourselves down to 70%. It's actually at 38,000. So there's a potential level. Problem with that, we don't really know. And as I said, it was 87, 84, 77. So we're just sort of making some assumption. At best case, maybe it's a 70% drop. Could be much lower than that, could be much higher. So I think it's a grain of salt, a grain of sand, grain of salt, whatever, kind of pinch of salt, that's what I meant. Take that one there. It can focus our eyes on an area, but not something that I'm necessarily considering too much. The other one we can have a look at is just simple TA. TA worked on the last one. We had a beautiful double top here, neckline, and then you guessed it, from there to there. I didn't draw that very well. Takes out, because it should have been like this. You get the point of it. Taking out there, comes down, we find our bottom within $1,000. So that's a fairly good way of doing it. There is a double top, which we could have a look at, but I think the most obvious one that people are talking about at the moment is the bear flags. The bear flags have played out on the previous fall from 90K down to 60K. And in that we had, top of the level down to the bottom. We obviously had the range in there. We play that out. Of course, it's not lined up perfectly because it's not straight, but that would be where it is. And we get from that sort of 98,000 down to around about 63,000, a fairly good indication of what that is. So we can say, right, well, let's have a look at how this could play out next time. We just so happen that line's pretty much exactly where we've gone. And we don't know where the top of it is, but if we went from our existing top and drew it down, that's going to give us a figure of 50,000. Okay, 50,000. Let's bear that one in mind as well. TA potentially suggesting 50,000. Let's just get rid of that. Don't worry, there'll be a chart later on that's going to blow your mind. That 50,000 kind of ties in with where the base of 2024 sort of ranging drop was. So there is some historic relevance to that level as well. We could actually do this. We could throw on the imbalanced vector candles, and there's not really too much on the weekly, but we throw it on the monthly, a very significant time frame. And we have a vector candle that could possibly be recovered. We'll draw it here. So that's what's left of this vector candle. because there was a wick that ate down through it. So that's going to leave us that zone there. If I throw this back onto the weekly now and remove that, we kind of have a range in and around 50,000 to 42,000, which there's a couple of things from that. We've obviously talking about that previous support. We've also, support. We've also got resistance. If we just move this out a little bit further, and it's tying in, excuse my nose, it's itching there, with the TA that we just talked about in terms of the bear flag. So again, there's that to consider from there. We could then, if you want, sorry if I'm rushing through it, because I've got plenty of them, and I'll draw some conclusions at the end. And these aren't the full answers. It's just to give you the the range of stuff you may be faced with over the next couple of months for you to just have to decipher through. And ultimately, the reality of it is you're going to have to choose what you think works best and go from there. So we can do the fibs, okay? And we can throw the fibs out and go, right, where do we focus all the time? We focus on the golden ratios. The golden ratio, the 618, down at 35,000. Let's not rule it out. That's going to be a hell of a fall. It's going to be about 73% fall. But we've got some other ones of interest. We've got 56,700, fairly close to where price is at the moment. We've also got 45,000. Now, you can see just by looking left, both of those have some price action support and resistance significance. In terms of the 0.5 fib level at 44,000, we've got this kind of, I don't know what you want to call it, shoulder, resting point, whatever, in and around that 44,000, which for those of you that sort of were in this industry long enough, is the start of the lead up to and then the kicking off of the ETF. So from a historic point of view, there's also some semblance of poetry, I think, in taking price all the way back down to there. But also at the 57,000, we've got pretty much, I mean, it doesn't line up perfectly, but pretty much ranging at the bottom of the 2024 sort of sideways action that we had for 9 months. So something to consider. I do think that the ETFs themselves, in terms of when they launch, would provide a fairly good level at in and around about 40,000. And as I said, there's almost an element of poetry of taking that all the way up and then all the way back down to that level. I do believe that the last bull market has been institutionally driven. And so it would kind of make sense that actually taking that price back down to where institutions got back in. But there are other things to consider, and a lot of those are on-chain. And for those of you that went to one of the cuddles back in February of 2025, I did a, how to identify a Bitcoin top, and we used on-chain data to try and help with that. At the end of that, I actually went on and talked about the fact that we could use some on-chain metrics, and some on-chain metrics are absolutely brilliant at identifying bottoms. Now, I accept didn't work well for identifying the top, so maybe we need to take it with a pinch of salt. But some of the ones that I actually talked about, I'm going to show you here. So we've got coin value days destroyed, which are cumulative value coin days destroyed, sorry, I should say, which, as it says down here, sorry, my nose is incredibly itchy. Coin days destroyed is a term used for Bitcoin to identify the value of unspent transaction outputs. So basically, when was the last time a coin was moved from one wallet to another? That accumulates a certain amount of days. And then when that happens, those days effectively get destroyed. And it tracks, as I say, the cumulative sum of the value time destruction as coins move from old hands to new as the ratio of the market age. And then they have some fancy thing about times it by 6. Doesn't necessarily matter, 6 million, sorry. What we can then see is we see this green line. And what is quite interesting is that this green line has touched the bottom of every single bottom, even the COVID drop. It's been there. And at the moment, this is currently finding itself sat in and around 47,000. So another figure to consider. Long-term holder realized price is another one that actually looks very similar to what I just mentioned with coin value destroyed. We've got this, it's in orange now, with this orange line moving through. Now, it doesn't quite get the bottoms. It is ever so slightly above the bottoms, but it can start to give us a potential range for what this is. And for those of you that are wondering what it ultimately is trying to represent, it's a metric that calculates the average price of Bitcoin that the long-term investor have purchased their Bitcoin Okay, so it takes into account only those coins that have not moved for greater than 155 days. That's the delineation. You're a short-term Bitcoin holder if you hold it for less than 155 days. So actually around about 5 months. It's not particularly that long, but the idea behind it is that, you know, people who hold it for a significant amount of time, they are OGs, they are whales, they are happy to ride things out. So it's only when they start to actually be underwater that we're starting to understand that we're near a Bitcoin bottom. And at the moment, that's in and around 44,000. Now, it, as I said, doesn't necessarily mean that that figure is going to be the bottom, because historically, actually, the price has gone lower than that. But 44,000 would be an area of us to certainly have our ears pricked up, our eyes on the price. And then the other one that is quite interesting here is the Bitcoin balanced price, which again seems to interact with Bitcoin bottoms on a regular basis. As a matter of fact, 2022, 2020, 2018, 2014, and 2012 is a little bit lower, but it's kind of there. And again, this is using Coindays Destroy, which is why it is very similar. But actually what this does is it divides it by the amount of Bitcoin at the time. Obviously, the supply of Bitcoin changes over time, had it been circulating. So that's how we get a slightly different figure from this, but it looks quite similar. And this one here is currently sitting at 40,000. So again, a couple of levels there. Now, I've kind of thrown a lot of numbers at you, and that's going to be kind of hard to take in. And it doesn't really seem like there's any one number that particularly stands out. And this is what it looks like. I'll take a screenshot of this and dump it into Discord. And just make sure. Sorry, just bear with me a second. Yeah, it's fine. I don't know why the indicators didn't come across here, but if you have a look on this one, there's CVD, CVDD, should I say, and then this was the realized price one. So those are those two levels there, but for some reason they haven't come across on this, but I have superimposed them on this chart. So it's looking messy, but we'll try and work our way through it. We've got the two fib levels, the 382 around about 57,000. We got the 0.5 at 45,000. We got the realized price, as we mentioned. We've also got the bear flag currently around about 50,000, which, as you can see, looking left, tying in with historic price action there. CVDD at 47.4 thousand. Long-term holders realized price, which was the one that I actually showed you, at 43,000. We got that vector candle. We got the initial ETF buy levels at 40,000, the balance price at 40,000, and the 70% drop level at 38,000. I think whilst that is a very difficult chart to look at, what it does give us is an actual idea that somewhere between 50 and 40,000, there's a high probability that actually we will find that bottom. And there are plenty of other indicators out there that could allude to a very similar principle. So we can't necessarily determine how low it's exactly going to go, but what we can do is we can start to consider, what are we going to do when we see Bitcoin go through 55,000, when we see Bitcoin go through 50,000, 45,000, dare I say we actually get all the way down to 40,000. What is it that we're ultimately going to do? And before we ultimately talk about that, I think there's just something you need to have in your mind. And I think this is incredibly important. And unfortunately, historically, we fall for this. And I'm going to take you back to a news article from early January of 2023. Bitcoin failed to convince that the bottom is in, with 12K still likely. Now, if those of you that are around there, you'll know exactly who I'm talking about with the 12K prediction. And that was El Capo of crypto, very famously and very publicly suggested that the 15,800 that we saw for Bitcoin's bottom was not the actual bottom. And he wasn't doing anything until price hit 12,000. And he died on that sword until above 40,000. And the point that I'm necessarily trying to make, one, he wasn't alone in this, and we'll talk about that in a moment, but fixating on one individual price is incredibly dangerous, because if you just cement a value in your mind, whether that be 40,000, 45,000, 49,000, whatever, you will not budge. You will not move, or you'll be unlikely to be wavered away from that. If it got to, say, 43,000, you wait for 40,000, you just be like, no, we're going to wait. And then when it starts to climb back up, now it's just a, dead cat bounce, which I will talk about in a moment. We're going to make that move. And what you end up doing is you stubbornly, because of pride or whatever, refuse to get in at a near level that you identified, and then ultimately watch the market rally hard out of its bottom and climb through before you then have to effectively get in at a much worse return. And I sort of went through and had a look at some of previous cycles. I was involved in this myself. I've experienced this myself firsthand back in 2018. I wasn't around in the 2015 cycle, so you have to say it's with a pinch of salt, but the consensus of the bottom was around about 300. Then when we got to 300, everyone said it was going to get down to 100, whereas actually 200 was the bottom, and then we rallied from that one. As I say, I wasn't there for that. 2018, this is the one where my first experience of a bear market. I remember vividly this repeated interaction at 6,000, and everybody knew it was going to fall. It was just how far it would fall to. And I remember shorting the market the day it fell, and I felt like an absolute king for doing it. I even managed to get out, in the 3,000s very happily. But I myself was convinced that Bitcoin would fall to 1,600, 1,800 level, the level that I've marked there, because that's what was logical. That was going to be the next level down. And I didn't get back in, and I myself died on that sword. And it wasn't until the 1st of April, 2019, so tomorrow, what's that, 7 years ago, it rallied in one day from 4,000 to 5 and a bit thousand, that I realized the error of my ways and had to get back in. So, I missed an opportunity from 3,100 to 5,100, almost a doubling really of Bitcoin potential buying power, and then getting back in. So I have felt that, and that is why this time I changed it, and I was lucky in that I did manage to buy in at the bottom, but I started buying in before the bottom, and I bought in afterwards, and I was able to accumulate a vast majority of Bitcoin and altcoins in and around this level, the end of 2022, 2023, solely from the experience of missing out in 2018. I just couldn't take not doing it again. And so rather than focusing on a figure, I just focused on a time-based, sentiment-based, and a range of which I would be happy to buy back in. And I actually remember still being disappointed that I ended up doing some buys at 23,000. Bite your hand off now to get in at 23,000. So, it's about, yes, you may be underwater for a month or two, but in the grand scheme of a 3 to 4 year cycle, 3-year bull cycle, 4-year main cycle, that difference of a couple of percent is not going to be the be all and end all. Waiting stubbornly for it to recover 40% is going to make a significant difference. So yes, there is some indication that price may get down as low as 37,000, but please, for the love of God, don't just assume that that's what's going to happen. Either just test the water on the way down, or have an idea of, right, we're currently at 40,000. I still think it's going to get to 37,000, but if for whatever reason we hit 43,000, I'm getting back in. Have some sort of understanding of where that cutoff is, rather than just blindly focusing on one level. And I'd take it another stage to say, we don't really know how many more legs down we've got. There's an argument to be say, we had an M formation here. We've had drop 1, drop 2, so maybe we've got one more drop down. I would rather look at it from this point of view of the next fall we have, from let's say 67,000 to 50,000 or whatever. whenever we find that bottom of that fall, I think I will start buying in there, even if it's because we end up ranging for a little bit and maybe I can take some advantage. But I will start moving in, because what's more than likely to happen is maybe another 4 or 5 weeks of ranging here, taking us into May. We then have a month of falling into June, and then we range for 3 months, June through to September. And you know what? That's kind of the 12 months is already done. And because we've ranged, we found that bottom. It's not that we're going to have that next leg down. So I'd rather just sort of start to buy in. And don't forget, some of the sales I had at 94,000, getting back in, even if it is at 50, is a near doubling of where we were. So there's definitely an opportunity for me to at least take advantage of that and not stubbornly sit through it. And I implore all of you to just have a look at however you have left this market in terms of sidestepping or just stepping into cash or whatever, and having a look at how you want to get back in. Now, I appreciate that doesn't necessarily align perfectly with altcoins, and if you solely want to get back into altcoins, there is a question to be had there. But just think back to what I said on Total 2 in terms of the markets are kind of aligned at the moment. So generally 90% of altcoins will follow what Bitcoin is doing. And so it should give you some indication of where that is. I'm not necessarily speaking solely for BitTensor or for alpha tokens or whatever. You're on your own, I'm afraid, with those. But it's certainly there to have a look at. So that's something that I would just, cautiously bear in mind. As I say, I will post this through. I deliberately have left this ambiguous. I don't want anyone here to focus on a particular level. I don't want anyone to assume that I've said it's going to be 40,000 and that's where you need to get back in, because I don't know that for a fact. But I do believe still that we have one move down left in us. Where that move goes, I think we lose the 50k level. How far through that level of loss, I don't know. And that's why I will be reevaluating everything through that level. And mark my words, I will tell you about what my decisions are as and when they happen. But yeah, that's where that sits. Just one question that Carrie asked about what is a dead cat bounce. Just very simply, I think it was answered in chat, but just to clarify, a dead cat bounce is a short-term relief rally from significant falling. And the saying kind of comes from, even, if it falls hard enough, even a dead cat will bounce. That's where the saying has come from. So what you would see, and I suppose this is a better version. Let me just clear these. So on the way down in 2022, perfect example. Such a sharp fall here. We then had a relief rally, a suckers rally, whatever you want to call it. And then we had another significant fall back down. So the suckers rally being the fact that, we're trapping people into think that this is a reversal when it clearly isn't. And it's this bit here that is the dead cat bounce. There's no right or wrong distance in which that can be. Some people do suggest maybe it's a 50%. It's sort of the max level you can get. I wouldn't necessarily go too hard and fast on that. What you're really looking for is a strong move up, which then runs out of steam. So, like you get like an indecision candle, like what we can see here. Nope, not there, because I can't draw that very well with this one here. And then it just rolls over with another strong move. And that's it. And there's definitely arguments to be had that these are dead cat bounces here. There's one there. We've had, if I just put this on the daily, because it might look a little bit better. Oops. That moved down all the way there. Then the dead cat bounces up to here. And then the idea being that we will see another sharp follow through to whatever level that takes us down to. That's it. Simple as that. It's that simple. So just bear all that in mind. I was going to name some other people. If those of you that are around in 2022, you'll know some very other famous people that gave calls of 10,000 and 8,000 and 12,000, etc. that stubbornly waited until that changed. But we'll just leave that where it is. Let's get into a quick bit of charting and then we will wrap this up. There is not really much to talk about in charting. Nothing has fundamentally changed from where we are. But when we look at Bitcoin on the daily time frame, we can see that clear ejection from the 50 EMA, taking us down to wherever you want to draw this line. And there is an argument to say that that is the base. I accept that one. Back down to this base level here. And now we're just looking to see if we can recover up it. We are being held back at the moment by the 10 and the 20 EMA. Two EMAs that we have easily broken whilst we've ranged through. So the real battleground now, as we still continue this downwards trajectory, sits at around about 71,000, the 50 EMA again. That should be the level that you're targeting or marking as an alert. 71,000. Can we get ourselves back up towards 71,000? If we can we break through it? And then again, like I've said, week after week after week, we're looking to see what we can do with this side of the channel, which would be somewhere around about 77,000. Again, tying in with that 20 EMA on the weekly time frame, which we've always been hoping that we could get back towards. Hasn't quite happened yet. But I do think we are running out of time for that. Our best historic month in a bear market for seeing some sort of relief bounce has been March. We have seen that relief bounce, as short-lived as it was, or as narrow the relief as it was, in terms of just a 0.84%. And then we're going to look into getting through April, and then it's May, and sell in May and go away. And if conflicts continue to stretch on and more uncertainty in the markets continue and the likes of the stock markets continue to bleed, you better believe that Bitcoin's going to be doing it. Now, in terms of the RSI, neutral territory. So we can still go either way from where that is looking. So I'm sort of thinking more like this. Oops, no, not like that. More like this at the moment, because that's where we had it beforehand. So that's just what I'm going to keep with, and the fact that we've broken below it and we're testing across. And I'm just waiting to now see, can we get our heads back above it? And if not, I am expecting further falling. And I would believe that that would then be the start of the next leg down. Down on the 4 hour time frame, it doesn't really change anything there. Again, the RSI is looking fairly neutral after finding its bottom. But again, we're now running into, we can start to see a bit of a better picture. I've not moved the trend line, but you can actually see the trend line in the 50 EMA and the 4 hour time frame are on top of each other there, and that's what the price has been held up against. What do we really want to see to get through that? We want to see a vector candle, don't we? So we want to see that strength return in the next candle or two. So basically by the time the market's open tomorrow, and start to climb on through that one there. Other than that though, like, you can now see why nothing has really fundamentally changed. And on the hourly, it's exactly the same. We're starting to find more instances of, I'm sure we could draw this trend line better, but we can kind of see that we are ejecting several times from this trend line, and it's just not making it through. And again, the RSI is looking fairly neutral in terms of moving up and down. So that's it. There's nothing ground shaking, ground breaking to change from that one, I'm afraid. It's a waiting game. Bit tenser on the other hand, the daily time frame at the moment, after that lovely strong move up to 380, we talked about that pullback, the most logical level being 300, which was the Gandalf line at the 800 EMA. Bang, we hit it perfectly today. And we're sort of resting above the 10 EMA on the daily time frame. Previously, when we've hit the 10 EMA on this move up, we've actually managed to rally from that. So what I'd be looking for BitTensor, and I will probably take a trade if this happens. If I start to see that move up, if I start to see us clearing above, today, well, not today, tomorrow, maybe the day after, 320, I think we are going to have that move up. And there's two options from the move up. We're either going to continue past the 380 level and start to challenge into the 400s. We talked about 480 to 500 being the real level we need to challenge from a macro point of view, just because previous highs in these moves up. So this is the level here. It's that line. Or we end up just sort of getting in and around that 380 to 400 level, a bit of a double top, and then we start to correct from that one. Now, in terms of the RSI, it's still looking a little bit overcooked, in my opinion, off on the daily time frame, but we are back in the neutral territory, as however high it was, but we've just been elevated for so long. Kind of think that there is still a bit of further drifting down to do, not always reflected across in price as we suggest. And if that were to happen, I sort of said 260 kind of level, this sort of shoulder here, it's 250s where the 50 EMA is at the moment. So, give it a couple of days, it's going to be in around that. That's what I'd be looking at. We lose that, and I said this earlier, we lose this level here. And my view is we take these. We come back down into the noise. Maybe we're lucky and we get caught at the 200 with this bit here. My view is we actually do a full retrace. And now that is not off the cards. We have to accept that. We've seen Bit tend to make these strong moves up, followed by substantial moves back down as well. And as I always say, just because we go up really fast doesn't mean we can't go down really fast. So that's where I'd be looking there. But I do like what I see at the moment. And it's just a case now of what do the next 2 or 3 days bring us for BitTensor in terms of just its action. Oops, I thought I had my marker still on. Its action in and around there. So that's what I'm looking for. I don't know if the 4 hour is going to really tell a different picture. Not really. I mean, we've lost the 50 EMA, I suppose, and we've actually retested it and rejected from it. So maybe not as nice a picture as what the daily was showing us. We're getting towards the oversold level, but we still got some room to run. And so I think that you were focused on that one. There is more of a chance of that happening. But, and I say that, but the daily I'm waiting for is to get above that 314 level. Well, that's going to take us above this 50 EMA. So if from the 4 hour time frame we can do that with a vector candle, test above it, then I think that gives us the strength we need for that move. And as I say, even looking back historically to the midway through the month, we came down. We did lose the 50 EMA. We recovered it well, and look what we recovered it with, a stonking green vector candle. So I think all things kind of aligned for that's how we should be looking on the 4 hour time frame. And then on the hourly point of view, nothing's going to change. It's just going to be the 200 EMA, and it is. We were below the 200 and the 50 EMA, but similarly before, this is representative exactly the same scenario. Vector candles through. That's what we'd be waiting for there. We lose that, the 800 EMA, which lined up with the 200 EMA, which lined up with the 50 EMA, sitting around about 260. That's why we lose it. That's where my focus is going to be. There really is no point looking at any of the others, so I will just flick through. Ethereum, looking like Bitcoin, still below the 50 EMA, very similar. RSI in the neutral kind of position there. Not really too fussed about any of the others. Zcash hasn't made a move up. It's only at the 50 EMA. I think we might see that move up to 270. Maybe there's a short on there. We've been held back between the 50 and the 200 EMA all the way through this year, and we're having that discussion right now. So I think there could actually be a move. I wouldn't risk it much further than 220 down though. It's 213 for that base there, but you give yourself a little bit of wiggle room. Still a fairly good move, round about a 30% move from that with leverage could be a good play. In terms of some of the other things, the VIX, that was up at 30 not so long ago, yesterday, dropping back down to 25, but just we're volatile. That's all we can say at the moment. Things are still remaining volatile. When it's high, you buy. We just want to stay above that 30 for that kind of understanding. Dixie, we were above 100 earlier on today. We have come back down, but this is just snaking up. There's just good strength in the dollar at the moment, represented in a safe haven there. Oil moving up, and the Nasdaq and the S&P both moving down. So a lot of things are tying in to just sort of show where that is. As I say, there is that systemic weakness, which is just moving in now, and I think it is starting to speed up. And maybe we're lucky with a return to either the 200 or the 50 EMA, and rejection from those. I really will have to think about whether or not I want to try and take a little bit of profit on some of these. Circles still continues to drop back down. Nvidia having a little bit of a fight, but still there. Palantir's coming down. Tesla again, slight little bit of a recovery, but nothing too major. Coinbase. Again, not looking great. MicroStrategy, or strategy as it's called, coming back down to that level of concern from it. Astrid kind of treading water last few days. I think that's kind of where a few of those sit. I'm probably going to leave it there for now. Try and actually get it done in under an hour for once. So all it really leaves me to say, just to go back to, nope, not that one. Oh, I deleted them all, didn't I? Don't worry, I did save it. Let's see if this does it. A little bit of a Hail Mary, hey, whilst we try and recover that. Just don't be too focused on, the reason we talk about how low can it go, we're potentially at the stage of the next leg down. Try not to get too focused on where that level may end up being, and more just consider it in terms of an area for you to consider phasing back in. And remember, it's a complete mindset change in terms of when we're looking to move back in at near bottoms of bear markets in terms of times. Yes, we may not get the perfect top, just like at bull markets don't get the perfect entrance, but as investors we can ride a little bit of short-term loss because we know on the longer period we can manage it. If that doesn't sound like your cup of tea, then just wait till you see some actual significant strength come back in. Got to be a little bit more nimble there, because that strength could be pretty fast, but certainly something to have a look at. In terms of what's up for the rest of the week, obviously it's Easter this week, so Good Friday, Easter Monday, market's going to be closed. I'm not going to do a charting call on Good Friday, just because I'm not around and kids are on holiday. But I've asked Lewis to double check. I'm not sure there's going to be a trading pub in its traditional form on Thursday afternoon. So if that's the case, I will do a little charting call over that same time period. It might not start at 1 o'clock, but it'll be between the hours of 1 and 3. Just for those that usually watch them on the Friday, at least you'll get something on the Thursday instead. Other than that, try and enjoy the rest of your week. Look forward to Easter Sunday and stealing all your kids' Easter eggs. I'm certainly looking forward to that. And yeah, just try and enjoy life a little bit. Oh, I didn't have a look at where the poll was. Sorry, let's just quickly have a look at that end poll. So 25% think 50K, 40% think, 63% think 40K. I kind of think in somewhere in between there. I'd be delighted if we got all the way down to 40K. I absolutely would. And I'll start buying if we got there. As I said, I think next move down to 50K, I'm going to have some serious questions about starting to get back in and just accepting that from not even the best exit at 94, even price at 50K is a very good level to start buying back in. I will, as I say, make everyone aware as and when that happens. But thanks for those who did participate. As always, got any questions, feel free to tag me in Discord. Just drop me a private message if you want. And other than that, enjoy the rest of your evening. And I will speak to you all soon. Cheers now.